Hey, I'm Marlon Bowling, your tour guide to the ag commodities. We're going to go ahead and take a look at our market activity. Let's go right to the big board. Let's see if we can bring up the corn market prices. And our quotes are provided by bar chart. So let's go ahead and take a look at what we have here. We have the nearby May contract, 8 1/4 lower. We're now at 644 1/2. And we have the December new crop contract trading 3 1/4 lower. We're at 557 1/2. Well, let's go ahead and see what the soybean trade is doing here so far today. And in the soybeans, we have the May contract now down 16 cents. We're at $14.95 per bushel after hitting a low right after the open of $14.83 1/4. So a lot of pressure in the soybeans, but they have rebounded somewhat, and then they just kind of stayed there. They've been kind of stable here for a better part of half an hour. We have the new crop November soybeans, and they're trading 5 cents lower right now. We're at $13.11 per bushel. So look at that spread change between May and November. We have the May giving up about a dime to that new crop November contract here right now. Now moving on to the wheat, let's see what's going on in Chicago. We have the May contract now 6 1/4 lower. We're at 675 3/4, and that's basically about a dime off of our overnight high. We're about 9.5 cents off of that. July wheat is now down 6 1/4 cents. We're at 688 1/2 right now. Now, if you go to Kansas City in the hard red wheat, we have the nearby May contract gaining 9 cents today at 870 1/2, and you have July 7 1/2 higher at 850 1/2. So a whole different story between Chicago and Kansas City here today. In spring wheat trade, we're a little bit firmer. You have the May contract now trading 877 1/4. That would be up 3 3/4. And July is now 3 cents higher. We're at 877. Now in the cotton market today, we have that July contract up 118 points on the day. We're at 82.47. And we have the new crop December cotton quoted at 82.31. That's up 69 points on the day. Let's go to our guest analyst here and see what the heck is going on with the markets here. They've been kind of jumpy so far, and it is our final trading day before we get into the extended Easter holiday. We have Ted Seifried with us of Zaner Ag Hedge. Ted, interesting trading session here. I thought things would get kind of quiet as we get toward the holiday break, and it doesn't seem to be the case here today. Now, we did have our weekly export sales numbers that came out this morning. I don't know if they had any impact on today's trade or not. What do you think about that?
First of all, we got to say that the corn number was a little bit higher than normally what we see this time of year, but we need it. One, and two, after all of the string of sales that we've seen to China that had been happening on basically a daily basis, I got to say, to me, it's a little disappointing that it wasn't over a 1.5 million metric ton number for corn. So I don't know. I kind of take that seemingly good corn number with a bit of grain of salt, just because there was so much lead up going into it. And then for the soybeans, that's the second lowest weekly number that we've seen in this marketing year. Not terribly shocking, although it was below the range of guesses. This is the time of year where we should see that number start to come down, and maybe at some point might see some bigger cancellations, which could give us a negative number. We have seen that one time, I think it was about 3 weeks ago. Aside from that, no, Marlon, I think today, while the export sales, I don't think were a tremendously positive aspect of the market. I think today has more to do with global issues, specifically issues with us and China. The Taiwanese president, she was in California meeting McCarthy, and China has talked about retaliation. Now, when Pelosi went over to Taiwan, the retaliation that they had was really sanctions against Pelosi and things like that, more war games, things like that, political in nature mostly. This was a little bit different because they're talking about restricting their exports of rare earth materials, i.e. the things that make semiconductors and chips, the things that we kind of need. And if they do that, that really brings back the whole idea of the trade war again. In fact, this is the first time in the last couple of years that we've really had good reason to think about the trade war, trade with China, and what might happen if they start restricting some of their exports to us, and what would our response to that be? And so I think that really put a bit of pressure on soybeans. Corn followed. Wheat is just wheat. I don't know what else to say there. And the good news is that we've had the dip buyers come in. After this recent dramatic rally that we've had off lows, that happened in just 7 trade sessions. We've had a bit of a pullback. I think you have some dip buyers in front of a 3-day holiday weekend, but it'll be very interesting to see how we close today, Marlon. And it will be very, very interesting to see how we reopen next Sunday night into Monday.
One thing I wanted to ask you about now, if we can bring that weekly export sales graphic back up on the screen again. We had soybean sales for this past week. Now, the overall total was 107,000 tons. We had sales for old crop coming in at 155,300 tons. Now, the reason that's different from what we have on the screen is because for the new crop, we had net reductions of 48,300 tons. Now, we did sell some to Japan, but that was more than offset by some fairly big reductions by China of 66,000 tons. Is that a concern, or is that just the way they normally do things here?
You know, I think that's China looking at this Brazilian crop and saying, hey, it's actually maybe a bit bigger than expected. So what they were looking at, I think, there is that early in our next marketing year, or very early into when those what we would call new crop soybean sales would be, I think they're expecting that Brazilian crop will still be there and still be trading at a lower price than where we're at. I think that's what it is. Now, it's not a huge amount, but it does send a warning shot across the bow, and it is a concern.
Now, I did see on the soy oil, we had 27,600 tons that were sold last week. That's a marketing year high. Why the run on soy oil? Have you heard?
I don't know. Look, there's so many different things that we're using soy oil for now these days than compared to where we were 5 to, certainly 10 years ago. And soybean oil has gotten substantially cheaper than where it was even just a month ago. So somebody felt like it was the right time to buy.
And then a little bit ago, you were mentioning the difference in the prices of Chicago wheat versus Kansas City. Boy, Kansas City is really gaining on Chicago. Now, I'm going to assume that is mainly weather related then?
Yeah, look, that spread has never been wider, at least not to my knowledge, right? It's pretty incredible. You've got 2 different kind of sets of fundamentals, though, because of the weather that's happening for the Kansas City wheat versus the fund makeup or the technical makeup or the money flow makeup of the Chicago market, which is the funds are really very short there. So it's a rubber band that is being stretched, I think, about as far as it can go. It's going to be very interesting to see how that spread continues to trade. I would think that Chicago should play some catch up at some point. But if that is the case, that might mean it's coming along with short covering. And that catch up might translate into a pretty stiff or a very nice bounce there in the Chicago wheat contract.
I did want to bring up the fact that we had beef and pork export sales this morning as well. And the beef sales, well, they weren't anything overly exciting here. We had them at 13,600 tons this past week. However, you look at that pork number, 53,900 tons this past week. That was a fairly hefty number. In fact, it was a marketing year high, they say, 75% higher than the previous week. But 53,900 tons of that total, China accounted for 20,200 tons of that. That seemed like that should be pretty positive. But I do want to take a look at what's going on in the futures trade. It doesn't necessarily seem to line up here. Now, on cattle, and I want to get back to this too here in a second, live cattle have been stronger all day. June up 222 at 162.52. And all the deferred contracts are way over $1 higher. In fact, that August contract is up $1.70. On the feeders, you have the May contract $3.32 higher at 205.42. Strong performance here by the feeders. In fact, for a while after the open, it was over $4 higher. But then you get to the lean hogs, and with that big export sales number on the pork, you have the May just 15 cents higher at 81.45, and it had to work to get to that point, the way it seems. June is down 65 cents at 87.67. What the heck? You got no kick at all out of that export number.
Yeah, when we talk about hogs, it really reminds me of wheat. You have the funds, which are really rather short, and they seem to be trading something completely different than what I would think fundamentals suggest, especially on a day where you have a marketing year high in export sales. And a lot of that's to China, really kind of confirming the ideas or the fears that we are having about their ASF problems being bigger than advertised. There's a lot of reasons that I think the hogs are really underperforming right now. But look at the cattle. Yeehaw. Yes, export sales weren't all that great, but this is all about domestic demand. Cash cattle continue to be in fuego. So that's going to really help the board. And then feeder cattle have that double reason to be higher, with corn being down, live cattle being higher. There's really no replacement animals out there. We talk about that a lot. So yes, very nice day there in the cattle complex as a whole.
You know, it's kind of like watching a slow motion train wreck, because we've been talking about this big shortage in supply on the cattle side for about a year already, and it just keeps coming and it just keeps coming, and everybody knows it's coming, but there's not much you can really do about it.
Yeah, the funny thing about that, Marlon, is that there's a saying that we've been using, or I've been hearing since I was on the floor 17 years ago, is that we trade futures, not todays. Well, the funny thing about that is that for the cattle market, it seems like we've only been trading todays. We wait for the cash to lead us. The futures hadn't ever really run in front of that, which to me says that there's still a lot more upside potential to go in the cattle market.
Well, if you had the cash trade that much higher yesterday, does that mean there's more coming next week, do you think?
It really feels like there is. That domestic demand doesn't seem to be wavering really hardly at all. Packers' margins seem to be there, at least enough to allow them to continue to bid up. Yeah, it doesn't. At some point, we'll cool off a little bit, but I feel like we just had that correction a few weeks ago. Now we're still in the period of time where it's just going to have to overheat.
Interesting stuff. All right. That's going to be a lot to chew on, if you will, over a long holiday weekend here.
All right.
But anyway, I hope you and your family have a great Easter weekend. Thanks for joining us here today, Ted. Look forward to talking with you again next week. Ted Seifried of Zaner Ag Hedge in Chicago. So